This is the 10-Minute Contrarian Podcast. This is VP. We are a solutions-based podcast, diving into the world of contrarian investing and alternative finance. You can find us hosted on the No Nonsense Forex YouTube channel, NoNonsenseForex.com, and podcast players everywhere. Episode 260 is brought to us by ByBit. This whole World Cup promotion is going crazy right now. Not only can you bet on individual games, but the futures betting market has gotten very popular lately. And what ByBit is really trying to be is kind of the everything platform. Like, you can do just anything you want there and you never have to leave. Trading, investing, staking, RWAs, prediction markets. And on top of that, if you click my link to join, you will receive bonuses other people do not receive on top of enhanced customer service, which, as we all know, is a bit lacking in this industry, but not here. Go down to the show notes, click the ByBit Blog, scroll down to the blog, click that affiliate link, get yourself signed up, and get yourself started. Not only can you pretty much do anything you want on this platform forever, but in addition to that, with ByBit, membership always has its rewards. It is the 10-Minute Contrarian Podcast, and it's hard to know what the stock market is going to do in the short to mid-term, at least for the rest of this year. Now, we all have our predictions here. You guys know mine. I think the Trump administration is going to throw everything they can at the markets and the price of oil to keep oil down and markets high. And for the first time ever, I was actually very interested in a Fed speech. I listened to Kevin Warsh's first address to the media. And I got to say, he's a very different Fed chair. He doesn't want to be really anything like Powell or Yellen were, which is great. And he doesn't want to be, what am I trying to say here? He doesn't want to be the one guy who influences what the market does. He wants to delegate off to task forces. He wants to leverage the intellectual capital they have in that building. Remember, I think there's 900 PhDs in this building just going to waste. He wants to take the best and brightest and put them together and actually listen to what they say, which is great, as long as he actually does that. But it seems like he wants to. He seems to actually have a bit of sincerity to him, unlike previous Fed chairs. And so what does that mean for the markets? We really don't know. We're going to have to kind of see how this plays out. I mean, everybody has their guess. The markets do react. But I'm surprised how little the markets actually reacted to this. I expected more. Now, one of the things that did react was the United States dollar. It got quite a bit stronger. And I was waiting for something like this to happen because on a lot of my charts, especially the DXY, on the monthly, it really looks like we're about to turn over to the upside here. And I was really just waiting for Kevin Warsh's comments to confirm this, and it did. So based on that alone, I would expect to see dollar strength against other currencies, at least going forward. And now what does this mean? Well, hopefully it means the back half of this year is going to be great for FX traders. And we can finally break out of that range dollar-wise. We already are. So far, it has not been great for the things we really like gold and Bitcoin and things that would protect yourself against the demise of fiat currencies. But the demise of fiat currencies is inevitable, no matter who's in charge of the Fed. So we will happily take the discount and continue to buy and hold forever things like gold and Bitcoin. But also, you have to remember, assets also benefit from the demise of fiat currencies, which will continue to happen for the rest of our lives. So the question is there, out of all the stocks out there, if we were able to just pick a few and buy and hold them forever, which, how can you be against something like that? How great would that be? Just to have a few set it and forget it stocks and just benefit from them for the rest of your life. I mean, I know that's a very long-term prognostication, but if you had to pick a few, which ones would they be? Now, the three I'm going to choose today are not without their own controversies, but there's a couple things I want to make sure I do here. One, I don't want to get caught up in too much recency bias. So like when OpenAI finally gets their IPO, or something like Palantir. These are all crazy new technologies that look like they have a lot of staying power, but they haven't shown me that they've had staying power up until now. They just simply haven't been around long enough. So I'm not going to be super reactive that way. So that's part of my criteria. The other part of my criteria here is I am looking for stocks that are, quote, like eating the world. Remember, we are looking for best in breed in everything we do. And you could probably make arguments here, but I don't think you can make very good ones. I think these three are very much at the top of their field with what they're doing, and the fields they're in aren't going anywhere. And they're like this blob that just keeps eating everything in its sight. They're just getting bigger and bigger and stronger and stronger. So based on that criteria, what do you think these three stocks might be? For those of you on YouTube, you have seen the thumbnail. You probably know what one of them is going to be, but most of you are listening on audio, so you don't know this yet. Speaking of YouTube, what I would like you guys to do who are on audio right now is go to YouTube and go to the comments section and tell me what your three forever stocks would be, and also tell me why. I don't think there's really any wrong answer here. I think there are better answers. I think mine are the best, obviously, but I would like to hear what you guys have to say. Are these stocks already in your portfolio, or do you just hope to have them in there someday? Remember, we are long-term buy and hold investors. We buy things and then we do absolutely nothing. With the exception of certain stocks like energy, your time frames can be a bit smaller there. But to be able to just buy a stock and then just have it in your portfolio and do absolutely nothing is a dream for long game players like us. So I feel like episodes like this are important because with a lot of the things we invest in, even though we are long-term buy and holders, we're still waiting for a particular thing to happen, such as running out of silver, or Bitcoin becoming super scarce, or blockchain technology finally taking over the payment space. To where with stocks like the ones I'm about to mention, we're not even really waiting for anything to happen. It's kind of already happened, and it's just a matter of how much more it's going to happen. So there's a bit more certainty here. So much of the speculation we normally employ with what we invest in just doesn't even have to happen here, which is why these stocks just have such a set it and forget it nature to them, which is very appealing. So I won't hype them up anymore. Again, all three of these do have some type of controversial aspect to them, but I just don't think it matters really at all going forward because of how they have positioned themselves so far and the way they have positioned themselves for the future simply by, like I said, they're eating the world right now. They are giving themselves such a lead, almost an insurmountable lead. It's just that how is their competition ever going to catch up? So the first one we're going to talk about is, I think these are all stocks I've talked about in the past in some capacity, but the first one is going to be Exxon, ticker symbol XOM. Bet against Exxon at your own risk. I know at times it is correlated too much with the price of oil, but it still just manages to keep going up and to the right long term regardless. Sometimes short to midterm it gets a little frustrated because it sits in a range forever. But keep in mind, it also pays a pretty nice dividend while you're sitting there in that range. So if you were to tell me if I was going to hold a forever stock that it's either going to range or long-term go up with very few dips, that's pretty much XOM. And as a forever stock, this is exactly what I'm looking for. Now, when talking about Exxon, I would be very careful not to get caught up into short to mid-term narratives. One of those was the whole ESG movement that started back in 2017, probably before that, but really caught wind in 2017, saying how the whole world is going to completely eliminate its dependency on oil and use all of these renewables instead. And during this time, investors were like, oh shit, better get out of oil, to where actual energy people were like, LOL, there's no way this is ever going to happen. It's all a grift. And as always, you should listen to the people who are actually in the industry. But Exxon also understands what we talk about here is you're going to need energy from wherever you can get it from. There's only so many molecules out there, and we will need all of them, especially just how fanatically hungry all of this new technology is for energy. And Exxon has diversified itself quite well. And it's great when you're so big like they are, and like these other two companies I'm about to talk about, you have the ability to do things like this where your competition doesn't necessarily have it, or you can just do it at a much higher clip than your competition can. And so they have diversified into things like carbon capture, hydrogen, lithium, which we love here, like low emission diesel, natural gas, biofuels, their very own battery technology. They understand they're not going to get taken out. If anything, they're positioned to lead the charge in a lot of these categories just because they're so goddamn big and they can. And don't forget, too, what we talked about with the Western Hemisphere shooting to become very self-sustainable. There's a reason why there was no and will be no oil crisis in the Western Hemisphere, because we have the oil and gas. And who is at the forefront of that and who is going to continue to be at the forefront of that, probably for the next 30, 40 years, it's going to be Exxon. They're the head of what is going on in Guyana right now with all the oil they found over there. Venezuela was the only roadblock there, and now that roadblock is gone. Not only that, guess who's stepping in a big way in Venezuela? Chevron, because they've always been there, yes, but also Exxon. We've said it many times here, we're moving into a very bifurcated world. And one side has the oil and the energy security, and that's freaking huge. And who is at the top of that leaderboard by far and diversifying themselves to be the leaders in all these other areas too? That's going to be Exxon. When these companies get big over time, they also eat up all of the intellectual capital out there. These companies have some of the smartest people in the entire room, and that's good to know as well. Because when you have that, you don't have to act rashly. And you can make smart decisions, which means not only are you going to make all the great decisions I feel like Exxon has made over time, the chances of you as a company doing something stupid, or should I say doing stupid and not being able to recover from it, are almost zero. Really, the largest existential threat to that company was the ESG movement. And the entire movement was just so anti-science, it was destined to fail from the start. No amount of evil global cabal was able to take down a company like Exxon. And if they can't do it, what is, right? If the most powerful group of Western world leaders could not take down a company, tell me exactly who will. Nobody. This is a stock I want to have forever. So moving on to stock number 2, and certainly not without controversy, that's going to be JP Morgan, ticker symbol JPM. Now, if you remember the last time I spoke about this stock, I compared it to a stock I actually liked better in the same space, and that would be Royal Bank of Canada, ticker symbol RY. But the more I think about it, which of these two would I like to have as a forever stock? And it's kind of tough because there's a bit of recency bias going on here as well. When comparing the two side by side, however, there are two very distinct differences. Of the two, and I don't know how much this even really makes a difference stock-wise, but of the two, the one thing JP Morgan would really have working for itself is that it's not in Canada. With apologies to all my Canadian followers out there, you know exactly what I'm talking about. How is Canada, with all it has, losing as much money as it is losing as a country? How on earth is this country in the red? How on earth is this country bleeding money? The answer is obvious: terrible leadership. Speaking of Davos, right when Canada was about to figure it out and get rid of the Davos puppet, Justin Trudeau, Davos throws a Hail Mary and says, well, maybe if we can just get these people really riled up and angry at Donald Trump, maybe they'll vote for Mr. Davos, Mark Carney. I know, it sounds crazy, but it might work. Who knows? We have nothing else. And they did it, and Canada bid on it, and now they have Mr. Davos man in charge for I don't know how much longer. But when you look at the recent futility of Canada, look no further. I just feel like this country really has to hit rock bottom before it figures it out. It has to really go under before it can get over. And they're just such in a rough place culturally right now, to where you have to ask the question, how long is it going to take for them to get out of this? Major systemic changes are going to happen at this point. It seems like right when they were getting close to getting on the right track, they fumbled it. And then you have the whole Chinese aspect to it also, to where they can leverage their relationship with the Chinese against the United States. But overall, is that going to be a long-term good thing for Canada? I know I have an American bias here, but I would say probably not. Maybe short-term, yes, but long-term, I doubt it. Canada isn't in a great place to negotiate. They're in a decent place, but not a great one, especially when your two choices are China and the United States. And if you're trying to have a cooperative relationship, remember that word, cooperative. Again, China and U.S. aren't the best choices, but I feel like China would certainly be the worst choice there. But all of that aside, I'm sure that's going to rile some people up. But if I would really like to have both stocks. But if I had to choose, it would be J.P. Morgan for that reason, and the other reason to where it's the same as Exxon. They are just eating the world with the acquisitions they have made, with the fact that and the banking sector is still pretty weak, but especially at the regional level. And who's going to be first in line when these regional banks fail. On top of that, the biggest existential threat to the traditional banking sector is blockchain, and there is no traditional bank, believe it or not. JP Morgan, the evil empire, the one that always talks bad about crypto, but as we know, the reason why they do it is only to stall and buy themselves time to catch up, which they have done more than any other traditional bank on planet Earth. They are the leaders in blockchain as far as traditional banks go. Not something the crypto community really wants to come to grips with, but you're going to have to as an investor. Remember, if you're Canada-centric or blockchain-centric, you got to put emotions aside and just deal with what is. And in the banking sector, what is JP Morgan is eating the world. They are expanding into Europe, where confidence in a lot of the banks there is dwindling. This is a very interesting strategy, too. It's called a cut-to-kill strategy. It's a very passive, non-aggressive strategy, yet still very predatory all the same, to where you pretty much, because you're so big, you have all of the pieces in place to take over and step in once your competition fumbles. If you look at what the United States just did with all of the insurance that covers the ships that go through the Strait of Hormuz, that used to all go through Lloyd's of London. And then due to the recent war in Iran, Lloyd's of London said, okay, this is no longer worth it, we're out. And the United States immediately stepped right in. Almost like it was planned that way from the start. The deal the U.S. made with China by taking oil from Alaska, very similar. Oh, can't get oil from Iran anymore because of something we caused? Oh, no problem. We'll step right in and fill that gap. Again, these are more American-centric things that happen, but you see this strategy everywhere. These are just the most prominent going on right now that are the most easy for me to reference to you. But that's the gist of what a cut-to-kill strategy is. Either allow your competition to fumble on their own or cause the fumble and then be right there to step in once that confidence is lost. Expect JP Morgan to become a much, much more prominent player in Europe over the next 10 years. The big just keep getting bigger, and if you have a moral problem with that, I understand. But as an investor, you simply cannot ignore things like this. And as an investor, you have to do what's in your best interest. And I think it would be in everybody's best interest, not financial advice, to hold JPM as a forever stock. So let's go ahead and do one more. My third one is in a space that we know is going to pretty much last forever, or at least for the rest of our lifetimes, is gigantic, established, and really poised to eat the world here, and are already taking all the steps to do that. And this is going to be Alphabet, ticker symbol GOOG, Google. People were calling for Google's demise because they said nobody's going to use search anymore. Well, Google erased that concern real quick with their AI product, which, by the way, I know this little horse race shifts all the time, but right now, for my money, Gemini is top dog. They are by far the fastest of the LLMs out there and just keep getting better and better. I saw a stat the other day, like the amount of pages Gemini can access compared to the competition is probably 4-1 at this point. And again, morally, a lot of us, especially the anti-censorship crowd, which I would fall into, has a bit of feels towards Google for their censorship efforts years ago. But they have seemed to have gotten past that. Now they still have blood on their hands and will probably continue to going forward. But it's nothing like it was before. Even things like YouTube, the only competition to YouTube were the anti-censorship platforms, which very few people even seem to care about anymore. YouTube just keeps getting bigger and bigger and bigger. They still have a giant presence in the cloud space. And you have to remember, too, just the user base they have to market to whatever new thing they come out with is so much bigger and so much more established than even X with Grok. Or I've heard like 1 billion people use OpenAI now, which is not nothing, but AI doesn't have things like Google Workspace and YouTube that they can utilize to market their new products to where Google can. And speaking of, Google is the only company of the bunch that actually has a full stack service when it comes to all of the things that are going to go into the future of technology going forward with, when it comes to AI and then their own chips. And then you add in the storage. Like none of these other companies have that combination. And it would take them over a decade to develop something like that. And they still don't have the legacy brand with all the legacy customers to market to. Only Google can say that. You got to give them credit for what they've done and how they have protected themselves against a world that's moving further and further away from Web 2. Again, there are several common threads that kind of run through all of these stocks. Best in breed, eating the world, got over their biggest existential threat. So with Exxon, it was ESG. With JP Morgan, it was blockchain. And with Google, it was the rally against censorship. And some of you might be saying, well, yeah, all it takes is one election cycle for all of this to change. I feel like they have learned a very important lesson. I don't think we're going to see the same type of world domination, kill free speech type of push that we saw before because these platforms have learned just how unpopular that was. Now, Europeans might chime in and say, well, it's still working here. Well, it is for now, but it's still wildly unpopular. And as a business, this is not the route you want to take. So I feel like all three of these companies are so well positioned going forward. The biggest bear cases you could have made in the past 10 years, they have really dealt with it superbly and are continuing to deal with it. And nobody knows what the future is going to look like 20, 30, 40 years from now. But if you had to take an educated stab at it, which is exactly what we're trying to do here, I think you would be hard-pressed to find a stock better than these three. But I welcome what you have to say about that in the YouTube comments section. Come on in, chat with us, shoot your shot. The one argument I could really create, however, and I should go ahead and mention this while we still have a bit of time, is with Google. All right, if you were to come in and say, well, what about, just removing all doubt and investing in something like QQQ, the NASDAQ ETF? Because if you remember, we did a whole episode on this, all right? We're not so contrarian to where we cannot recognize an amazing product for what it is. And these S&P 500 and these NASDAQ ETFs are so amazing because the way it works is no matter which companies emerge over time, company or companies, through these ETFs, you are certain to possess all of them because of how they're weighted. And that's pretty damn hard to beat. So I couldn't really argue with that point, apart from the fact that if I'm being petty and overly technical, I would say that QQQ is not a stock. It is an ETF. So as far as actual stocks go, these are my three favorite in terms of actual forever stocks. Now, as far as how to play them, I mean, it's one of those things. If you're going to hold for 30, 40 years, who cares when you buy it, right? I can understand wanting to buy things when they're cheap, but these things, how often do they really go on sale? I mean, Exxon's kind of on sale right now on the monthly, but overall, it's like, yeah, you can use the monthly chart and try to get in on, quote, dips. But stocks like this, you're always in danger of those dips being at a much higher price than what it would cost you to get in right now. So I cannot advise on that for sure, but just something to think about as well. If you have that crazy discount mind and you just can't buy unless you're getting in on a discount, just please remember how short-sighted that might be going forward. It's like gold and Bitcoin. I just want to have the gold. I just want to have the Bitcoin. I don't care what I pay for it. And with stocks like these, if you are as bullish on them super, super long term as I am, you might just want to get them in your portfolio and just bite it and just deal with the ups and downs, knowing that overall, these stocks should make you very, very happy. Not financial advice. But our end of show tagline, I don't think really applies to this episode. I mean, maybe it does because stocks are almost at all-time highs right now. But I guess what I can say is when you take the long-term approach like we do and you actually mean it and you actually live it and you actually apply it, really nothing we do should ever be looked at as crazy. We are just always early.